We start with a strong rally to wrap up the week. The major indexes or indices, whichever way you want to say it, all closing up more than 2%, with the Dow finishing just shy of its 50-day moving average for the very first time since September the 12th. It's now up 3 weeks in a row, its longest winning streak since last November. The S&P and the Nasdaq also posting solid gains today. Meanwhile, we saw some big intraday swings in some other markets. Take a look. The yield on the 2-year Treasury swinging nearly 20 basis points from high to low. And the greenback, the dollar, finishing the day nearly 2% off of its intraday high. All these moves come as we count down to a big week for tech earnings. Microsoft, Alphabet kicking things off on Tuesday. So how does today's action set us up for what's in store for next week? We're going to begin it with the dean. A lot of people call this gentleman the dean of this thing, Guy Adami. Hey, Guy.
I don't know about Dean, but welcome, Frank. Listen, it's interesting. I think people will make the assumption that all four are going to miss terribly or all 4 or 5 are going to have tremendous earnings in the markets. And the reality is you'll probably get a mixed bag. That's what we've seen the last couple quarters. So I know Tim talked about this last week. I brought it up as well. This period reminds me of the middle of June of this year when the market proceeded to rally 17.5%, 18%. into August, and I think we're in the midst of that now, and we've actually talked about it. So, yeah, you're getting a bit of a relief in the dollar to the downside. Yields are sort of taming up a little bit. And I do think there's probably another 7.5% on top of the 7.5% we've seen in 4 or 5 trading sessions. Does not mean all's clear by any stretch of imagination. I'll say this again. I still think lower for the year, but tactically, I think we're in the midst of what we saw in the middle of June.
Jolie Beal, I see you nodding over there. Do you agree with this mixed bag philosophy?
Yeah, I agree that, these tech names are not a monolith. They actually run very different businesses that have very different drivers. They upset the regulators pretty regularly, and so that comes into their business as well. So I think we have to look at them each on a case-by-case basis. Generally speaking, some of these businesses are some of the more durable ones. I'm thinking of Alphabet in that case. And valuation is starting to be in a place that's a little bit more compelling, where I think you have a little bit less risk. So I think there's definitely some interesting names, but I completely agree with Guy. This feels very much like a bear market rally. We're very enthusiastic. We all want the Fed to stop raising rates, but at the end of the day, the stock market's not the mandate. It's inflation and employment.
So, obviously, we could have a mixed bag. One of the big factors in that mixed bag idea here, Steve, is the dollar. The dollar's been really strong this quarter. It impacts different companies in a different way. But remember, just a few months ago, Microsoft actually flagged a headwind with the dollar as far as EPS.
Yeah, so it feels like the dollar is definitely extended. We all know that it has been extended. So that would be the inverse correlation between oil and the dollar is the only thing for me that would stabilize oil or energy prices right now. And then when you look at big cap tech, I do believe that you're going to see 5 to 7% moves post-close, post-earnings on these names, which has been a huge moves, and we're not ready for that. Mm-hmm. We've had it, but we're not ready for that. So to Guy's point, maybe one stock's up 7%, the next night it could be down 7%, and it gives you net nothing to think about going into year end. I think we've all masked ourselves again, thinking that rates are going to turn around.
Wait, pivot?
Yeah, I think, what's the reason for the rally today is that maybe people think there's going to be a pace pivot or a pivot. And to Guy's point, maybe we can rally into Powell speaking, and that's going to be the shot of reality for us to say, oh, wait a minute, he really is still hawkish.
Right.
So I do believe we're going to get a rally going into year end. I thought it was going to stem from midterm elections. But maybe we get a little bit back up again the week of Powell, and then we rip.
We had a monster week in yields up until today, and the reversal today. So I think this is what is being threaded into every comment so far. It's all about rates. It's all about the dollar. And we're not going to rally in equities with any meaningful and sustainable push without getting some clarity on rates. And so the 433 intraday high on the 10-year to close at 422, 463 on the 2-year note before pulling back to about 446. A lot of this, I think, also helped by what happened in Japan. So Japan had a CPI number this morning, 8-year highs. And again, you saw the dollar go to 114 because you get to this place where you have this mismatch. BOJ has to come in. Dollar starts to actually sell off, and we went all the way down to 111. We talk about this all the time as well, which is this volatility in currency and rates markets is scary, but it's what moved the equity markets today. And if you look at that turnaround, it was all about it. So what's going to rally in a world where rates are coming down? I think the certain mega cap tech stocks are in a pretty good place to actually do that. Next week's earnings, I think, are obviously critical, but they're not what's driving this market. Okay. And to me, this was a week where, if anything, Fed speak had people give it led to more of a debate about, OK, 75 in November for sure, but maybe only 50 in December. And what I'm hearing out of a handful of Fed members is they really do want to wait.
So, Sam, let me push back on you for a second. We got earnings next week. That's for the quarter we already have. So rates declining, how's that going to change the Amazon story? How's that going to change the Meta story? I mean, Amazon, obviously, big portion of their business comes from consumer spending, but people are still buying their toilet paper and their sneakers and the stuff they were always going to buy on Amazon.
Let's hope. Yeah, so I'm talking about how people participate in the stock market and allocate capital. So in a world where rates are peaking, what stocks do you want to allocate to? You want to go to mega cap tech stocks that I think are going to be defensive. First of all, none of those big five have really told you that their business is under any major pressure. We haven't heard about enterprise. We haven't heard about the consumer. So, no, a view on rates even just peaking is going to be a view where investors are going to allocate money towards the places where they have the most confidence, but the places where I think you get a little bit of growth at a reasonable price. And I think technology, at least those tech stocks, not mega cap tech, although those are the ones that will rally the most. So if you feel like we've peaked in yields and you want high beta, you should be going for actually the internet stocks and the stocks that have underperformed. And look at the week that Netflix had. That was both fundamental, but also I think the whole space rallied.
Yeah, Netflix seemed pretty interesting. I mean, that jump in subscriber numbers with inflation, with all that competition, not even sure what to make of all that. But, Guy, I want to come over to you. When we're talking big tech, does inflation create a narrative at all for these companies for this quarter?
So, look, I would submit the one that's really most affected by it were two of them, probably Amazon in terms of their margins, potentially, and Apple. And Apple, I mentioned, again, not that I'm a hater, because, listen, they're not impervious to what's going on in the world, and they're still selling $1,100 items in an environment where people are starting to focus on what they're spending money on. So they're not going to be impervious to what's going on globally. So, yeah, I do think it creates a bit of a disturbance for them. But other names, you know, I don't necessarily think it's a big deal for a Google, and I don't think it's necessarily a big deal for a Microsoft. There are other headwinds those companies are facing. So to Tim's point, inflation's about allocating capital, and the inflation problem is not over by any stretch of the imagination. And the relief rally we saw today on some belief that potentially these guys and gals are going to pause or pivot, you know, it makes sense. I think it's going to be short-lived.
Julie Beal, one last word.
Yeah, no, I think Amazon is the bellwether that I'm paying attention to for earnings. I think, you know, no one on this panel is old enough. I am the one who remembers when GE was the bellwether, and now I feel like that's really Amazon. But I'm really curious to see what's happening with the consumer, what's happening at enterprise. And they just have their hands in so many different pockets that I think they are really the one to pay attention to in terms of where the economy is going.
The G used to stand for Guy in GE, so I think Julie could be wrong on her assessment of the age on this panel.
Yeah, I didn't know if that was sarcasm. I mean, like, you don't ask lady her age or anything, so I'm just like, wait a minute.
If you know Julie, you know you get zero sarcasm out of her. That was sarcasm. And I tell you, I just say this about GE. Also, part of that rally today is Baker Hughes. They don't own the same piece of Baker Hughes they used to, but it was an oil services rally that led it to GE.